Think about it, what is macroeconomic investing? It's using the economy to understand the direction, the future direction of assets. Why does that happen? Well, simply, if the economy is booming, people have more money to spend, and it tends to be positive for assets. And if the economy is slowing down or negative, then you tend to find that asset prices don't do as well. Kind of makes sense. Some assets work the opposite way around generally. So usually when things are slow, bonds do very well, but equities do badly, for example. And the easy way to see this, well, it's not so easy because you can't do it without putting it in a spreadsheet. It's actually the year-on-year rate of change of almost every asset, whether it's copper, oil, the S&P 500, bonds, yields, anything. They're basically related to I use the Institute of Supply Managers survey, the ISM survey, which is a monthly survey that basically tracks GDP, so economic growth. And it shows you that as soon as you make these things year on year, they look identical to the economic cycle. And that's the kind of big unlock, is realizing the economic cycle drives all asset prices. If you know where that's going, you can kind of make forecasts about asset prices. Yeah, once you've figured out the ISM and how it works, you can then find things that lead it. So that gives you an ability to forecast, okay, what it looks like. So currently I'm using a mix of the rise in interest rates, the rise in commodities, and the rise in the dollar. And it's like financial conditions. And that's suggesting that the economic cycle goes almost immediately to recession and pretty sharp. And I think a lot of people are sensing that is happening. You're hearing it from companies, you're hearing it from a lot of people to say, yeah, looks like we're going to recession. So the forward-looking stuff suggests we're about to go into a severe recession. So now you need to figure out, well, what are asset prices pricing in already? Because you can't trade on today's news. You need to trade on tomorrow's news. And really speaking, you need to trade 6 months out news. And so where are we? So if I look at the year-on-year rate of change that I talked about, if I look at the S&P 500, it's already pricing in about 42 in the ISM, so a full recession below that 47 level. Could it go a bit further lower? Yes, because my forward-looking indicators suggest the ISM could get down to 40 or so, maybe a bit lower. But we're kind of in the right zone to say, actually, a lot's been priced in. Could there be one leg lower? Maybe. But that means that as an investor, your spidey sense should be up saying, hey, is the opportunity coming here? Everything is always different, but it's always similar. So the question about 2008 was different. 2008, we had a financial crisis. So we had another thing. It wasn't just the economy slowing down, but we had something much worse. And 2001 was much worse. We had the biggest stock market bubble in history that unwound. This time around, I'm struggling to see what that big thing is. Yes, we've had inflation, which is different to the prior cycles. But inflation is also driven by the business cycle, and it should come down over time. So I don't see the really terrifying outcome. Of course, some companies might go bust. People will lose their jobs. Maybe some weaker economies will suffer badly. But generally speaking, I'm not picking up, oh my God, we've got a debt crisis coming or something really bad. So I think it is different. And so a lot of people are expecting the next leg down, is this going to cause the crash? I mean, the markets are already down. I mean, the Nasdaq's down 27%. It was down 35% or so. It's pretty much crashed once already, but people are like, can it go down 50%? Because they look back at 2008 and 2001 and said, see, it can do that. When you go back to other recessions like 1990, it was a 20% correction. In fact, even when the Volcker years, the famous time when Paul Volcker was raising interest rates and slaying inflation, it's still today. I mean, 100% of my liquid net worth, so all of my savings that I don't need to cover my bills, is in crypto. And I've been adding
Wow.
because we're at that point where the economic inflection point is going to change, and that tends to be quite good for crypto. So I don't expect everybody to do that, because liquid net worth is different to entire net worth. I've got houses, that I don't have mortgages on, I have an income. So the amount of risk I'm taking is actually not as big as it sounds. Um, and first time around 2013, it was significantly less because it was riskier. We didn't know, was this technology going to survive? Was it going to be banned? All of the questions that have now mainly been resolved. We didn't know that back then. It's like, here's a bet. I think I wrote the first ever macro strategy piece on Bitcoin in 2013. And I said, it was $200 at the time. I said, listen, if we value it like gold, it could be worth $1 million. So let's assume I'm an idiot and discount myself by 90%, still worth 100 grand. And therefore at $200 with the upside, you could lose all your money, but the upside was 100,000. I'm like, this is the best risk reward I've ever seen in my entire life and the best one any of us will ever be given. And that actually proved out to be the case. The hard thing about the crypto ecosystem is there is so much happening all at the same time. I mean, they've just raised $60 billion in venture capital and everybody's building out projects, whether it's lending markets, financial markets on DeFi, whether it's putting traditional financial markets onto blockchain rails, whether it's putting real estate onto blockchain, whether it's building, doing really interesting things with NFTs, such as ticketing. So we're seeing Ticketmaster has issued 10 million NFTs, the largest NFT issuer in the world. That's going on. We've seen Solana building a phone which integrates all Web3 in your wallets. You've seen, I mean, there's literally almost too much to keep on top of. So, how do you pass through all of that excessive information? You start looking, okay, what are the main chains that the activity takes place on? And the main place is Ethereum, and then places like Solana, Avalanche, Polkadot, and a few others. So that's how you kind of filter down. You see all of this stuff going on. You're like, oh, this is overwhelming. But then the great thing is what platforms they're being built on, and then we can invest in the underlying platforms and protocols. I think the most powerful thing that I ever created was a network. And I didn't really realize that. And my network started at Goldman Sachs and maybe before that. And then the people that came into my network along the way, if you give them good karma, you're good to people, you help people, what happens is it builds, like in crypto, this network that has value to you as a person and also to the other people. And so even in this digital world, having a network of people around you, don't have to be physical, that you help out and they help out you, you don't realize the opportunities that's going to bring. And you measure yourself by the quality of that network too. Sure, we've all got a bunch of friends we grew up with that we're just kind of stuck with because we grew up together. That's okay, but you need to be actually careful about who you want in your network. And it is immensely powerful. It doesn't mean it pays off today, doesn't mean it pays off tomorrow, but it pays off in the end because you'll be smarter, you'll see more opportunities, and you'll have more opportunities. And that is a really powerful thing.